right, good afternoon, everybody. Getting right into it, I think I lost about, I'm down about $305 today, and I am not super happy with my performance today. I had the right ideas, but I let my mind get the better of me, and I let the numbers on the screen get the better of me. So, coming into today, 10, go to 6. Price is moving down pretty quickly, and we are coming back up very slowly. We have this 4-hour fair value gap down here that we have been respecting up until now. Excuse me. Jumping down to a 1 hour when let's get rid of this. So when I came in this morning, what time are we at? 5. So by the time I came into market, we had created a nice 1 hour BPR. Um, and we had also tapped into this 4 hour fair value gap. So breaking through this bullish fair value gap to create a bearish BPR is inherently bearish, but we did reject very, very hard out of this 4 hour fair value gap. So I wasn't very sure. But what I did take into account is look how quickly we move down and look how slowly we move up. It seems like market is drawing lower to these various lows down here and also breaking through this 4 hour fair value gap. So coming into a 15 minute, the 15 minute was very helpful today. So we have this 1 hour BPR here that is also in line with a bearish 15-minute fair value gap, as well as an order block in here and a breaker in here, and this provides us a breaker plus fair value gap, which is where I like to take my trades out of, but I was not thinking about this at that time. So I did want to possibly take longs up to this 1 hour BPR, but I would have been all out in here and expecting price to go lower. So jump to a 5 minute and let's bump over to market open. So market open, actually, I'm going to go back one more. So I was looking for a singular fair value gap in here, and I actually found one on the 7 minute time frame. And people might think, oh, 7 minute, why would he use a 7 minute? But remember, time is fractal, and there can be, I was concerned about a singular fair value gap, and fair value gaps on all time frames will be holding, but also too on this 7 minute. Let's see about the 5 minute. Yeah, we have also have a 5 minute bearish breaker within here, and also this 15-minute bearish breaker. But 7 minute singular fair value gap, and the price is also being held up inside of this 5 minute fair value gap. We are not closing any bodies below it. So right now I am seeing a little internal model and assuming that we are going to go higher at open. So I took all my trades today on the 2 minutes, and we still continue to have strong wicks to the upside, respecting this fair value gap. So market opens, we create a bearish breaker. We are sweeping liquidity, but also it can be viewed as a liquidity sweep, but also a market structure shift. So immediately, we do not touch this fair value gap. If we would have touched this fair value gap, I would not have looked for a long. But we create a 2 minute fair value gap, and I'm thinking, okay, even though it's just open, we had a shift of structure. This is an internal model playing out. We also have a breaker in line near this fair value gap. And, well, actually, no, this would be the breaker, but I would look at this as a breaker too, holding us up. So I want to take a trade out of this fair value gap, and my hard close, hard stop would have been down here, but if we moved through this 2 minute fair value gap with quick displacement, I would have gotten out. So this is where I would have looked to take profit, and I would have been only with one contract, so that would have been all out there. But jump into a 1 minute, price immediately, boom, it fills me and starts running right through. So this is what the 2 minute candle looks like. So at this point, I am out of this trade. It did not hit my soft stop, but it was moving very, very quickly, so I decided to get out of this trade. So now we have a BPR in here, and my long did not work. I was okay with this loss, and I probably should have known taking it so close to open was not a good idea. But next candle slams right down through that 7 minute for value gap and immediately bounces right back up. Very, very next candle, we fill the top of this 2 minute for value gap. So at this point, this 2 minute BPR, sorry, 2 minute BPR isn't valid, and this breaker over here is invalid, but this overall breaker is still holding. So I'm still looking for longs because we have not came up and reswept this high, and we have also not tapped this higher time frame PDRA to push us lower. So next candle comes in, body closed just at that breaker, not through it, and next candle moves up. So on this candle, I enter right away on this candle at the open. I wasn't super happy with the fill, but I was willing to get in because I was assuming we might just run straight to this high. So this was the trade, first entry, and then we also have an order block here. If price came back down and touched the order block, I would have entered two contracts, and boom, price came down and touched the order block, so I entered another contract to take up to this high. So at this point, I was in two contracts for about a 1-to-1 and a 1-to-3. So I think it averaged like to a 1.15. Um, so everything is looking good now. And I'll jump over to the 1 minute because this is where it starts getting cattywampus. These next candles, this candle right here does it for me. I was not paying attention and I had this old BPR still on my chart, and I was thinking, oh my gosh, it just violated the BPR, not looking that, hey, this is a very old BPR that has already been violated. And because of that, I got out of the trade, even though that was not my model. This trade was based off of this order block and this breaker block, this green breaker block holding. So that trade should not have been closed because we came down and boom, we tapped a mean threshold of the order block. And then next candle, immediately, next candle, I get out on this bearish candle, and the next candle immediately goes to the high. We tap mean threshold, go right back up. The order block and breaker block are still holding. So I should not have gotten out of this trade, but I had seen the drawdown I was in and seen the speed of these candles and was thinking, oh my gosh, I don't want to lose another trade, even though my stop loss was in place. And if price came down to that stop loss, that means my model is invalid and we most likely would not go to this high. Price did not hit my stop loss. I got scared and got out. And that is not how I should be doing things. And that's something I need to keep drilling into myself because it happened before this week. A big thing ICT says is just let the trade go one more minute and see what happens. And in this case, if I would have let the trade go one more minute, I would have been way back up in profit. So that would have hit, and but I was not in my contracts, and I would have been all out there. And then eventually, price goes up into this 15-minute for value gap. We'll jump, or sorry, 1 hour BPR actually. But see, it hits this breaker, and or let's see, it hits the breaker and 50% or equilibrium of the fair value gap and has a very, very hard rejection. So from here, this could have been a trade in it of itself if you wanted to go short at the breaker with a stop above. You could have technically done a stop above this high, but we'll just put it there for ease sake. And you could have targeted this low, because at this point I had gotten off the charts because I was frustrated with myself. And when you are frustrated and you lost a trade, it's best to just get off. And I would not have been in the right headspace to have taken this trade in good conscience. Sorry. Um, so this could have been a trade of itself. You could have just set a limit there, stop above there. You're already at a 1 to 2.6 or 1 to 2.7 for take profit. But you could have taken profit right at the top of this 2 hour or 4 hour for value gap again, and then partialed again at this low. And price from there ends up just tanking off the face of the earth, exactly like I had thought it would. And I do feel a little frustrated that I missed out on this short, but again, I can't be frustrated because I would not have been in the right headspace to have seen this trade and taken this trade. And I was mad at myself because I caused myself to lose money. My model did not cause me to lose money. If I would have followed my model and not messed around with my trade and my stop loss, then I would have continued, or not continued, but I would have won that trade. But too, something I'd be curious to see is the standard deviation. Standard deviation. All right, well, that is not the right one then. Let's try. Well, both side manipulation. Not quite sure. I'm still learning standard dev and not 100% sure, but yeah, even bouncing around the 2.5. So yes, this is how the day ended up playing out. I was not really happy with my performance because I got in my own way and I caused myself to lose money again, and that's not how I want to be doing it. And that is still, oh, even on the 30-minute, we respect this breaker while tapping into the 30-minute for value gap. And that's the trade I took yesterday. We had a breaker on, not all of them, but we had a short setup on a lot of the time frames, and my short yesterday was good for that, but not very happy with my performance today. And I let my fear control me today, and that's not how I want to do it. And I will always be working to get better on that, because if your system, or if you are controlled by fear, then your system will be controlled by fear, and it's going to hard for you to be consistently profitable. But that's all I got for you guys today. Have a good weekend.